Hi guys, good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and it's it is the monthly expiry day, and you would probably expect volatility of some sort. Though these days, I think a bit of the volatility happens in the preceding days, so keep that at the back of your mind. Is there a glare? Yeah, there is a glare. Okay, let's just try and talk about the key things to focus on in the session. The world markets. I think there is something out there happening at the broader end of the spectrum. So if you look at the US markets yesterday, they did okay. I mean, I'm not saying they did badly. I mean, they did reasonably okay for themselves. But if you look at the Russell 2000, which is the small cap index in the US, that did really well, 1.8 or 1.9% of an uptick for the Russell 2000. So that index did really well. And frankly, well, small caps are doing well probably across the world. And therefore in India, it should be no different. So good solid move at the broader end of the spectrum, and I would presume that therefore stock specific action in India would continue as well. Just quickly, let's take a look at Asia and SGX Nifty and just see what's happening at that end. So yeah, I mean, mixed bag. Some markets in the red, a couple of markets in the green. This may also be due to the fact that the US futures are trading fairly flat. But let's get the SGX Nifty up on the screen. And after reclaiming almost 15,300 or thereabouts, are we set for new highs in the current month itself, or would it take time? Well, about some points higher, 19 or 20 points higher. So we'll probably have a start which is flattish to marginally higher, or maybe lower, who knows, but around that level. So frankly, the index level won't matter too much in the session today. I think that's what the index is trying to say. So what's the trade setup like? I mean, if we just, I've kept it very bottom up today because frankly, that is what matters today. So reopening trades are in focus, both worldwide and in India. Yesterday, actually, if you saw the US markets, a bunch of reopening trades did really well. And we're starting to see that in our markets too, right? Day before yesterday, we had the hotel stocks do so well. We're seeing some of the building material companies starting to do well. Real estate is coming back with a bang. So I think reopening trades are in focus worldwide and in India. Because of BPCL, and I'll get to that in a bit, OMCs would certainly be in focus today. So I think that's a pocket to watch out for. I mean, we've been talking about this now for the last 3 days. I hope it was of some use to any of you who are listening. And I somehow believe that non-ferrous companies and capital goods stocks could continue to show the steady up move. There is confusion as far as steel goes. I'm not saying no, but as far as non-ferrous companies go, there probably is no confusion. The strength still remains intact. So that's the point that all of us should keep in mind. And frankly, if you just look at the MOV function, it'll show you what we did in yesterday's session, right? And the kind of stocks that did well and the kind of stocks that did not. And actually, if you see in terms of the companies that did well, the peppering of mid cap and small cap names, essentially reopening trades, but some of the others too, which had a terrific outing in the session yesterday. So yeah, just look at this, right? So if you look at Mahindra Holidays, 14% higher. So big strong up move in BSC, by the way, up about 14%. But Just Dial, on expectations of somebody coming out and putting some money out there, that stock is up about 9%. There's strength in Wokhard at nearly 800. Team Lease going up about 7 or 8%. By virtue of Bajaj Finance doing well, Maharashtra Scooters up 6%. And very few losers. Frankly, the number of stocks which came off was not very, very high. But the point, viewers, that you got to make is that here's the deal, right? So specialty chemical companies are great. I'm talking purely from a trade perspective, okay? So specialty chemical companies are great companies, but are they moving right now? They're not. What's moving is the reopening trade, and you got to align your trades accordingly. So just keep that at the back of your mind. It's a risky proposition, but if you don't take a little bit of risk, then you're not effectively a good trader. So just keep that at the back of your mind. I think the stocks in focus today, and undoubtedly, OMCs and BPCL at the top of the pile, right? Now, BPCL, the key thing that they've declared a dividend. Okay, let's start off with the results. Never mind. Let's just stick to the results first. Yeah. So this is what they did: 76882 versus 76410. So better than expected revenues, much better than expected EBITDA margins, net profit at 11940 versus estimates of 1980. Of course, there are one-offs out here, but still a commendable show on the bottom line. Then the company has declared the big thing, which is the dividend of 58 rupees per share. This is huge, right? And yes, in some quarters it was known that this would come about, not the exact number, but a good number would come about, simply because even in the last meeting, the company had postponed the Numaligarh refinery dividend payout, right? Before the proposed divestment, you would expect that the government would, or the company would give out the dividend to the existing shareholders. And therefore, it shouldn't come as a surprise to anybody. This is par for the course. This had to be expected. This is fair, and which is what has happened. Now, the key is whether this will lead to an up move. Naturally, you don't need me to tell you that it will lead to an up move. What I'm trying to drive home here is that aside of the up move, expected up move in BPCL, some part of it would have happened, but some part of the juice is still left, and I would expect a strong reaction from BPCL today. But the key is this. What we've tried to do is just give a bit of a bifurcation of what all the three OMCs seem to have done in the quarter gone by. And if you can get that going, so you will see a couple of things. One, the GRMs picture. BPCL reported GRMs were about $6.6 per barrel, expected between 4.5. So much better than that on the GRMs, much better for HPCL too. And IOC did fantastically well on the GRMs. The expected GRMs were about 6.4. They did 12.5. So that number was really good. And then if you look at the valuations, I'm flipping the argument here. Look at the valuations. BPCL at about 7.8 to 8 times EV EBITDA FY23, HPCL 4.6, IOC just 4. Now, obviously, BPCL gets the dividend because in some quarters it is believed to be a better run refinery, but also because of the privatization premium. That if it is going to get privatized, then naturally you would give that little bit of attached premium to BPCL. The question is, do the others also deserve a bit of a leg up? And I think that's the question that some of the traders will be trying to answer. That now with BPCL doing what it is doing, and if it does well, then the attached premiums to IOC and HPCL also move up. And you would probably expect the two of them along with BPCL to also have a good run. Smart HNI buying has happened in IOC. So you got to keep that at the back of your mind. Then Tidewater. I'm bringing up one company in between the results. They're going to consider a bonus and a stock split on June 10th. The stock was up about 7-8%. It's a very illiquid stock, so please be careful if you're going to buy on the basis of this. And keep in mind that Andrew Yule owns 26% stake in the company, so Andrew Yule may also be in focus. I just want to leave viewers with the thought that bonus and stock split, aside of the fact, I mean, the stock split does nothing really except for increased liquidity. A bonus too, to my mind, does nothing really, but for the fact that the dividend payout, if you are indeed a holder, is spread over more number of shares if you held one. So therefore, that is probably a better way. But the point is that it does nothing to the EPS, PE, etc. So just don't get caught into it because of this reason alone. But yes, it is a good gesture, and therefore might get rewarded. Just keep in mind that people who had whiff of it had already bought in yesterday because the stock was higher. So just keep that at the back of your mind. Then let's move on to the next set of numbers-based moves or the analyst commentary-based moves. So Burger King, and the reason I bring these numbers is that the numbers are better than estimates, viewers. Revenues up 2.6%, better than estimated. Same-store sales declined 4.9% compared to a corresponding decline of the previous quarter was much better. EBITDA up 17%, which is pretty strong. And EBITDA margins was a big surprise, uptick of 150 basis points. So Burger King did really well. The question is, can it continue to do well? I think time will tell. Let's wait and watch. Will the markets reward this? I suspect that there should be some positivity to this, but let's wait and watch. And then Mindtree, they came up with an analyst meet. I mean, we spoke to the management at length, so nothing new that they have said. But the reason I bring it up is because there's a bunch of brokerage notes out there for Mindtree, and therefore the stock might react a bit. But I'm going to leave you confused with this. The reason is this. One, of course, they're saying that confident of delivering double-digit growth and maintaining their 20% EBITDA margin in FY22. All of this is something that the management already spoke, not just in our interviews, I'm sure in all interviews, but they've spoken about it in our interviews. But the point is, the brokerage community is so divided here. Morgan Stanley has maintained the overweight rating with a target price of 2,300. MK, for example, and there are others too, but I'm just using MK as an example out here. They have reiterated the sell rating with a target price of 1,650. Pretty interesting, really, how the brokerage community seems to be divided in IT for sure. I mean, yesterday, for example, HCL Tech got a sell call, big sell call, despite the fact that it's one of the cheapest valued stocks. And HCL Tech stayed flat, but Infosys went up 3%. despite the fact that the valuations at Infosys is much higher than HCL. So the street is very, very divided when it comes to choosing the IT names. So you got to be careful about choosing these two. Then, I'm choosing 4 companies because the numbers and the signs and the commentaries, each of these have some weak signs to themselves. So Thermax, for example, capital goods is in a big uptrend, and therefore this might be okay, but the numbers and the commentary left a bit to be desired in Thermax case. MPS, I read a brokerage note, said that the results were a miss on all counts, for example. Cummins India, there was a brokerage note from Dolat Capital which said that the company's missed revenues, EBITDA, etc. But it is still not a bad performance, and you might want to take a look at it. But the export guidance has come off a bit. So Aramco was too missed through. So all of these have 1 or 2 things missing within them in the quarterly numbers. So if you're trading them, just be careful that it's not a all hunky-dory set of numbers the way it was, for example, small caps, companies like Moltech Packaging, which came out with numbers, and it was a hit on all counts, and they raised the guidance. So, there are companies like that which are doing really well on all counts. Some of the others, you got to be a bit careful. So just keep them at the back of your mind. And last but not the least, I saw some long build-up yesterday happening in select companies on the NBFC space, the India Bulls Housings, Bajaj Finance, DLF. So rate sensitives are seeing some long build up, and you might want to consider this pocket actively. So these are a few names again that you should got to keep in mind. But net viewers, the point I'm trying to make is watch out for OMCs, and not just BPCL, which will of course do well, but the others too will have an attached move. So if you're a fresh trader, and if BPCL starts off with a bump up, the trick might not be to not trade BPCL, but trade some of the others. If you believe that there is juice left, please be careful about trading them. I still believe leverage longs are a bit risky right now. You should watch out for what will happen to the non-ferrous names, because all of them, I presume they could be well. And despite the perceived weakness in Thermax, capital goods remains a space firmly entrenched in the minds right now. So do watch out for some of those. The reopening trades, investment-led trades could well do well for some of those. So that's the set of stocks that you should be working with today. But small caps, bottom-up ideas, stock picking remains the focus of the session today. Thanks so much for tuning in. Stay safe. And if you're stepping out, please wear your masks.